Good afternoon and welcome to our webinar today, How to Prepare Your Small Business Clients for Financial Success. I'm Emily McCormick, the Vice President of Research. Good afternoon and welcome to today's webinar, How to Prepare Your Small Business Clients for Financial Success. I'm Emily McCormick, the Vice President of Research at Bank Director, and today we'll talk about opportunities for commercial banks and how they can stay competitive in a fractured landscape by offering the right tools and services to business clients. We thank you for joining us. Today's webinar is brought to you by both Bank Director and FIS Global. An information resource to the financial community since 1991, Bank Director focuses on the strategic issues most fundamental to bank CEOs, senior leaders, and board members. FIS, based in Jacksonville, Florida, is a global provider of technology solutions for financial institutions and businesses of all sizes. Now, we've got a great conversation queued up, but I do have a few things to share with you before we get started. First off, we can't hear you, so don't worry about that. You have joined this webinar in listen-only mode. We do recommend that you click on the slide bar at the bottom of the screen. That's going to put our presenters today in full screen mode. If you have any questions today, you can note those by using the Q&A button. That's going to be on the right-hand side of your screen. This is something you can do at any time during this webinar today, and we want to encourage you to ask questions. We won't be holding the questions to the end. We're going to answer them throughout the discussion. So definitely feel free to ask a question, once you have one. We're happy to address any of that you have. If you have any technical issues, those can be noted using the moderator chat feature that is also on the right-hand side of your screen. So if you have any issues, let us know. We'll do our best to resolve them. And don't worry about taking any notes. We're going to share the presentation with all attendees within 24 hours via email, and we're also going to make this available on bankdirector.com. And one more thing, the opinions expressed in this webinar are those of the individual speakers only, do not necessarily reflect the opinions of the other speakers or of the entities with which our speakers are associated. So with all that, let me introduce our speakers today. Up first is Sandra Horvath. She is the Senior Director of Commercial Digital Banking Strategy and Engagement Community Banking at FIS. She has a background in financial management software, payment systems, and banking technology. Welcome, Sandra.
Thank you.
Next is Amit Mayer. He is Senior Director of Product Management at FIS in the B2B division. He focuses on streamlining the client journey and delivering client-focused technology through seamless access to digital channels and resources in the banking ecosystem. Welcome, Amit.
Thank you for having me.
All right. Well, let's get started. We've got a great conversation queued up, I think, and I'm excited to get into it. And just to start off the conversation, I hoped you could take a look at the competitive landscape and specifically how that's changed for banking business.
Yeah, and I'll start with that one. So, I mean, as we all know, COVID has really accelerated the move to digital. And from a business perspective, they've been historically used to more engagement at a branch level where they have an account manager, they sit down, that account manager manages their business, they fill out forms, all of that, as well as try to communicate to the bank that they're not a risky venture and they should be eligible for a loan. So that's how things have been done historically. And I think what's really changed, and I know what's really changed, is obviously the move to digital. Now, for a bank, the challenge is not to replicate what they've done in branch in a digital environment, but rather to leapfrog and provide even more seamless experiences and guidance to those businesses. Because now they're not just competing with other branches that are local, they're competing with technology companies and financial institutions that can also reach their local community business through electronic means. So the landscape has changed a lot. Having said that, the technology is out there where even smaller banks can be at par with larger banks in terms of their offerings while still provide that in-depth community insight that a business may want to have.
Well, let's explore that ramp up in digital a little bit further, because that's something we've been talking about for a decade plus, but something we really saw accelerate through the pandemic. So I'm curious how that shapes the relationship between business owners, business managers, and their relationship with their primary financial institution.
Sandra, do you want to take that? Or
Yeah, sure. I think, what is really critical is for banks to address the pain points that their customers or business customers in particular are facing. So that's really what's changing the relationship as well, is that they're not even just providing transactional services or lending products. They're having to solve for technology issues for their business clients, which really changes things. And so there are some key challenges that clients have, and they're related to cash flow as well as end-to-end business processes. So I'll hand it over to Amit to talk about what some of those cash flow issues look like.
Thank you, Sandra. All right, so just to set the stage, let's start with a couple of slides that talk about, small businesses in the U.S. This is taken from the U.S. Chamber of Commerce. Let me just share my screen real quick. All right. So does anyone have a clue or any idea of what's the failure rate of new businesses in the U.S. in the first year, small businesses? So if you said 20%, you were right. Does anyone know what's the failure rate of new businesses in the fifth year in the U.S.? Again, small businesses. If you said 50% or close, you were right. Why do businesses fail? Well, surprisingly, 50% of small businesses report about cash flow problems. To be more precise, they talk about understanding their cash flow and actioning their cash flow. In fact, 44% of businesses that failed reported that they were surprised by these cash flow insights. They had cash flow problems. Now, this is a little, strange. I mean, in this day and age of everything digital, with digital channels, with online banking, with mobile banking, how come so many small businesses, 50%, 1 out of 2 businesses, fail to understand their cash flow problem? And in order to understand that, let's go through a day in a life, or just let's try to analyze the client journey when they're trying to understand their financial health for their business. So let's take a hypothetical small business owner, Joe, who was a gym owner. It's November 29th, and he wants to understand if he will have enough money, available money next week to pay his utility bills, to pay his rent, to pay his loan, and pay a couple of his employees. In order to do that, he starts with logging into his accounting solution. Let's say he's one of the 70% that is using QuickBooks in the US. He logs into QuickBooks, and he starts to drilling down into his account payables and accounts receivables data. He's looking at invoices, paid invoices, unpaid invoices, bills, money coming in, money coming out. He, puts this in his brain, puts it aside for a second. Now he needs to understand the other half of the equation. So he logs into his online banking platform and start to look at how much money he has in his bank account. If he's banking with more than one bank, he needs to do that with other banks as well. What he needs to do then, he needs to use his mental math and try to see if the account receivable and account payables data combined with the money that he has in his bank will be enough for him next week to pay for whatever he needs for his business and still have money left. If he's a little bit more sophisticated user, he may be able to download a file from his online banking upload it to his QuickBooks, and then start reconciling between those transactions and his invoices, which is a cumbersome and time-consuming process. If he does all this mental math and he understands that he's okay, he has enough money, he lived through another month. If he does realize that he's going to fall short next month or 2 months from now, he needs to action that. And in order to action that, he again needs to log into his online banking client experience and start actioning things like sending money, sending a wire, paying a bill this month, transferring money between accounts, sending or receiving money through Zelle. There's a list of things that he can do to remediate on those insights. Now, you all agree that this is a very disjointed, cumbersome client experience. These are all siloed channels that the small business owner needs to log in and use his mental math and do all this calculation. Another thing to keep in mind that a lot of these small businesses, especially in the early years, don't have a lot of free cash in their hand. And they have a very small buffer that they can play with. So this is critical. So understanding cash flow is critical, especially for a new business or a small business.
Yeah, and I would add to that too, another major pain point is end-to-end process flows. So end user businesses are dealing with multiple banks, they're dealing with various software systems, and we are at the stage where we've got the technology to do data exchange, and therefore we can improve those processes end to end so that they are less disjointed. So in addition to having insights into a cash position, whenever a business needs to, for example, quickly make an approval for a payment on the fly or decide what payable they're going to prioritize, or they need information about a transaction, or all of these things that are part of day-to-day business management, we are able to assist that from a banking perspective, creating a better relationship between the bank and the business.
Yep, you're spot on, Sandra. And another thing to keep in mind is that these small business owners, they're great at doing what they do. They're great at managing gyms. They're great at managing coffee shops, at being good landlords, property managers. But they usually lack the business background and the business understanding on how to run a business. And they don't have a CFO. It's a small business, and they're looking for that partner that will help them, with those daily or monthly business activities and insights.
Well, walk me through a little bit as far as how can banks be that better partner? Because I'm sure a lot of banks out there want to solve for those challenges. They don't want stressed customers, and successful customers make for successful banks. So where's the fit for banks now?
Yeah, I mean, if you could speak to how a bank can help with cash flow insights, let's start there.
Absolutely. So again, banks can help by creating a holistic client journey. So instead of having that disjointed experience that I just talked about, banks can and should, and this is what they're doing actually, create that holistic client journey. So think about a one-stop shop for these clients' financial needs, from understanding their customers' cash flow to actioning cash flow shortfalls to reconciling their accounting data, invoices and bills, and even leveraging various banking products to provide targeted loans, cash management products, and others. So by creating that holistic client journey, banks and their customers can benefit from that. And I can share something that we're now working on at FIS. We're rolling out a new product that is called Business Insights. And what this product does is allowing the end user, the small business owner, to connect their accounting software, their QuickBooks, their Sage, their Xero, to their online banking experience. And once they do that, once we have this handshake, this product creates a tailored or a client-centric dashboard for the small business owners that not only shows them historical and cash flow forecast, it also shows him some insights about his business in terms of profitability, liquidity, efficiency, basically taking off that mental math that I was talking about and providing that virtual CFO all within one client journey. And if the application does forecast a shortfall, it also allows the end user to action it by, clicking a button and transferring money between accounts or contacting a banker or applying for a loan. So everything is done within one journey, in one place, and that whole disjointed experience is being taken care of by that product.
Yeah, and I would add to that we are fortunate to in the organization that we work with that we have such a breadth of offering. And each business really has different needs. They may be prioritizing their payables process, or they may have a need around foreign exchange, or it's all very different. But what we can enable is for a bank to provide more and more of those financial related services within a banking environment. So we could start with a focus on cash flow forecasting, but if there's another area that a bank's customers are really interested in, then we have the technology and the mechanism to pull that into a banking environment, allowing the bank to be more creative and competitive and tailored for their specific business audience.
Yeah. Well, to bring this back to strategy a little bit, because I know our audience is always wondering, how do we prioritize our technology roadmap? How do we prioritize strategy? How do we align technology with strategy? How do you do that kind of in that small business customer contact? What should maybe our audience be keeping top of mind?
Yeah, I think first and foremost, it's to partner with a provider that has the platform that allows that type of flexibility. The industry is really focused now around APIs, but APIs don't really mean anything until they're enabling services. So when a bank is working with a provider that can manage or that has APIs available and can easily introduce new products and services, then they're ahead and they can be adaptable. They can pivot, depending on what's happening. They can go upstream to maybe a more sophisticated client if that's what they choose to do as their commercial strategy. So it really comes down to working with platforms that provide that flexibility and with, easier data exchange, all that's happening around open banking. A bank needs to have a strategy to leverage those things. And the more data that can come into the system, there's also a new opportunity for innovation there as well, leveraging tools like robotic processing to analyze that data and give even further insights into what the best next steps actions are for a business. And that's incredible. That becomes very customized to what that business needs to get done. And they would obviously appreciate that relationship with their bank to give them those insights and the capabilities to run their business more effectively.
Anything to add to that?
Yeah, I would add to that. I think you're absolutely right, Sandra. I would add to that just to take a step back and think about, talk about how banks are looking at their digital strategies these days. So I think we're seeing a big shift in paradigm from a product-oriented digital strategy to a journey-based, client-centric digital strategy. In other words, if in the past banks used to have, an application for prospecting, an application for onboarding, for loan origination, for online banking, for trade finance, for mobile, what have you, the entire life cycle of a client. It will have all these siloed applications. Now, what banks are focusing on is creating a journey-based digital offering. So they're putting their clients in the middle, if it's a small business or if it's a commercial customer or if it's a wealth management customer, and they're starting to draw circles around them, this client, and see how they can fit in functionality and insights that are only relevant for this type of customer. So a small business owner, for example, doesn't need to get a loan offering that will fit a wealth management client or a multi-million-dollar company. They need to get a targeted loan offering. That's one example. Another example, if you look at the past, when banks are still providing that product-oriented strategy. If you log into banks' websites and you click on login, in many times you'll see a list of login options. A login, if you're a client, if you're a retail client, click here. If you're a commercial client, click here. If you want to see your lockbox, click here. If you want to get your trade finance, click here. This needs to be changed. This is the old world. Now, clients need to log in one specific spot and get that whole journey, created surrounding him.
Yeah, and I would add to that banks also need to have the mindset of fintechs as partners versus disruptors. And the more that a bank can bring some of these fintech solutions into their own environment, the more engagement that they'll have with their business customer as well. So this is another change in the industry. I think, at first it was the view that, oh my gosh, everything is going to disrupt banking. But the reality is that banking partnerships with businesses are very trusted partnerships. A business is going to want to work with a provider like their financial institution that they know is highly secure, that is going to provide accuracy, that is trusted, they've got history with, and yet they might see some innovation they're interested in. Well, the bank needs to look at that and say, well, how do we bring that innovation into our environment and provide that seamlessly within a hub, right, within a centralized experience where they can still fulfill on that requirement for the end user to have a specific type of service. So I think we're in an exciting juncture actually for banking where we can accelerate innovation and work with our end user businesses to understand where their priorities are.
I mean, a lot of the things that you've mentioned have really focused on leveraging data. And I know that's a big challenge that we hear from bankers a lot, particularly through our survey research. I mean, do you have any tips for banks in terms of how to maybe be smarter users of their data, how to make better use of that data, either in service or customers, or to improve things on the back end, to help those customers out?
Yeah, I mean, I'm thinking about the dashboard functionality, like for example, with lending, that a bank could utilize data to have insights to their potential business customers to provide lending at the right time. Is that something that you think is a way to leverage?
Yeah, that's a good point. Keep in mind when banks are working towards that holistic, comprehensive customer experience. For example, that product that I was just mentioning, or that dashboard, that lending dashboard that Sandra you just mentioned, oftentimes they get access to previously unavailable data. And this is, banks are starving for new data. Banks need that data to proactively engage with their clients and provide them with a more tailored service. So again, let's take that example that I just used. If we allow our clients to connect their accounting solution to their online banking platform, this will open a new door for both the banks and their clients. Think about the relationship manager or the banker that needs to service a client, and he can, log in, drill down, and see exactly his customer's financial health, see his understand his cash flow, see what products they're using or not using. Think about the Treasury Solutions team that can proactively engage with clients and sell them products that their clients are not using. Clients don't know what they don't know. They don't know all the products that the bank can offer. And a more sophisticated Treasury Solution team can look at the real needs of that client once we offer those insights. Yeah. I'm sorry, Sandra, go ahead.
No, go ahead.
Another example I can think of is the loan officer that needs to approve a loan or going through an underwriting process. He can drill down, log in, and see his customer's cash flow, see his financial health, see his liquidity, his efficiency, all based on that data that we're bringing in from other sources. So you're absolutely spot on, Emily. I think that data is key a good customer experience and customer stickiness.
Yeah. And I would add to that in industry today, more and more data is flowing through. So, for example, the new ISO 20022 standards that are going to enhance the data that banks have access to, that they need to look at that and say, this is information we didn't have prior. How do we change this and convert it into a value add for our business customers? And this is something that we can help our banking partners with as well. But not only it's the type of data, it's just the volume of data, and we can get creative with all of this new information that a bank can now leverage to better help their customer.
Yeah. Well, I appreciate some of the examples that you guys have provided, because it really brings it down to, I mean, really technology, particularly in banking, is really about enabling those relationships. I mean, at the end of the day, it's an individual that owns the business, working with their bank, and that sort of thing. And banks, of course, want to make sure those relationships become sticky, that you can become successful together. So, I mean, any words of advice on building this sticky relationship, creating that loyalty within your customer base?
Yeah, a couple of pointers. So first, again, customers are increasingly seeking simple, holistic, embedded, and direct experiences. The need is there, and if banks won't fill in this gap, other players will, either fintechs or accounting software providers or other banks, etc. So there really needs to be a focus on an embedded or a holistic client experience. The second thing that we need to remember is that the small business owner is only one persona in this whole equation. The other persona is the FI or the bank. Mm-hmm. And again, banks have a lot to gain from providing this comprehensive customer experience, from increased customer satisfaction, by finding that banking partner or that financial partner that escorts them along the way, to again, more customer data that's pouring into the bank itself that allows a better service for the bankers. Allowing the bank to get more visibility into their businesses, and the bottom line is increased revenue. More data coming in, more sales opportunities, more cash and more targeted sales for their customers. So this whole holistic approach the bottom line drives to revenue increase.
Yeah, and if I were to add to that around stickiness with a business client, I think that it comes in a couple of areas. Be part of the day-to-day running of their business, be part of their processes. Also, two areas around relevancy and customization. So really utilize the data to provide solutions to the business at the time that they need it, not when they don't need it. Otherwise, then it just becomes spam and they're not as interested, they don't pay as much attention. But if you offer, for example, a loan when the business realizes, oh my gosh, I need a loan now, and you present them with an opportunity and an easy way to initiate that, that's a much better experience than to continually sell something not necessarily at the time that they need it. And the other point I'd like to make is customization. Be so relevant to that client. For example, if they're in a specific industry and they care about certain financial services over others, then create a curated experience for them. Be very specific to that client and grow with them. So as their business becomes more complex, provide more sophisticated solutions to them. So what's really great about today's environment is, as I was mentioning earlier, a smaller bank can start to do these things that typically a larger bank may only have been able to do. So it's a level playing field in order to be more customizable to their clients.
Yeah, we've seen so much acceleration in digital, but there's definitely been a good piece of that in that community banks have a lot more capabilities and access to those capabilities than perhaps we saw even a few years ago. As we wrap this up, is there any final advice that you'd like to give to our audience?
Sure, I can think of a couple of advice that I think that it's worth sharing with the audience. So again, key point is journey, journey, journey. Use design thinking to analyze and understand your customers' digital journeys, their pain points, their needs, and make the shift from a product-oriented digital offering to a journey-oriented. Um, in other words, create those holistic experiences that will benefit your customers and the bank. Second thing that I wanted to mention, and Sandra mentioned a couple of minutes ago, fintechs. So they're not disruptors. They're not here to eat your lunch. There can be your partners. Reach out to your strategic partners like your core system providers or any other strategic partners that you have. If it's, I don't know, Salesforce or other strategic partners that you have, to see if you can have a fintech combined with your other solutions to create that holistic and that embedded, extra enriched, expanded client journey with your online banking offering. And last but not least, this is something that I've seen in the last, I don't know, 20 years or so in the banking industry. So traditionally, banks have that Chinese wall between their internal or core services and their external, their client-facing applications. So there's usually a digital officer at the bank that is in charge of the online banking, the client-facing side of things. And there's usually another part of the house that is in charge of the core application, the AML, your loan origination, or all of your internal application. Banks should start thinking about their digital stack as one digital bank. It's not external versus internal. It's one digital bank. And banks should start looking at opportunities to leverage, for example, data that is derived from their CRM system to bubble it up and use it in the client-facing layer. So in order to create a targeted sales opportunity. Or if you're looking at the other direction, if banks should look at data that is coming in from their client-facing application and drill down and see if the bank can utilize this information to understand why clients are using or not using some of their online tools and so on and so forth. So stop thinking about this, client-facing versus core. Start thinking about your entire digital offering as one digital bank. I think that this is the key to create those holistic experiences.
Yeah, and I would add, I would say prepare for the future. Have the technology in place to provide new solutions for your businesses that are outside of what you do today, right? I mean, not just transactional banking, but think out of the box about how you can be consultative with that business and help them solve their business problems, not just their banking problems. And I think that'll create a very strong relationship. So if you set yourself up from a technology perspective to do that, you'll be a strong player with your current clients and in attracting new clients as well.
I think that's a great way to close this out. Great advice from both of you. And I want to thank you, Sandra. Thank you, Amit. And thank FIS for co-hosting the webinar today. As a reminder to everyone out there, we will send you the recorded version of this webinar. You'll get it within 24 hours. You're also going to be able to find it over on bankdirector.com. So thanks everyone out there for attending today, and I hope you have a great rest of your day.
Thank you. You too.
Thank you.